Modern Money Primer Blog number 15, Responses by L. Randall Wray. This week, we examine the debt pyramid and clearing of IOUs in the state money of account. Thank you for your questions and comments, and apologies for being late with the response. Believe it or not, I lost track of the days of the week. Thought I had another 12 hours to get this done. Question 1. Please explain the degree of separation from the central bank. Answer. Thanks for the nice comment. See the pyramid below. Obviously, this is a simplified picture of the hierarchy. Within government IOUs, we include the Treasury and the Fed. Bank IOUs include demand deposits and other liabilities that banks promise to convert to government IOUs. Non-bank IOUs are issued by firms and households. It is rather arbitrary where we put the dividing line between bank IOUs and IOUs of other financial institutions. Perhaps the most useful way is to distinguish between those types that have direct access to the central bank and those that do not. That also brings up the point made by V. Cobbs. What happens if something goes wrong at the bottom of the pyramid, say in the shadow banks? Yes, and that is indeed what happened in the global financial crisis, GFC. Typically, those lower in the pyramid issue IOUs that are convertible on some conditions to bank IOUs, that in turn are convertible to government central bank reserve IOUs. When something goes wrong, the non-banks turn to banks for finance, lending against the non-banks' IOUs. The banks, in turn, go to the central bank, but when expectations turn ugly, the banks won't lend, so the non-banks cannot make good on promises. That led to the liquidity crisis. The Fed eventually decided to lend to everyone, including the Real Housewives of Wall Street, as Matt Taibbi demonstrated. Additionally, the pyramid is useful for thinking about whose IOUs one can use to make payments on one's own IOUs. You cannot repay your IOU with your own IOU. You'd still owe. Only sovereign government can do that. As we discussed, if you present a £5 note to the Queen, she gives you another. She still owes, but so what? You'll never get anything else out of her, even if you go to court. You use someone else's, what we call a second party or third party IOU. Not first, which is yours. Second would be using your creditor's own IOU. Third would be using the IOU of someone unrelated. Normally, those lower in the pyramid use bank IOUs. Banks in turn use government IOUs, central bank reserves. Jim wondered about power in the structure. Certainly, I'd love to be at the top of that pyramid. Even being at the bank level is a nice gig. Government would stand behind your IOUs, so they'd be as good as government's. Gee, do you think your IOUs would then be widely accepted? Yes. When government handed a bank charter over to Goldman Sachs, Goldman Sachs, suddenly its IOUs were as good as the Fed's, led to a huge multi-billion-dollar subsidy. On the other hand, that comes with tighter regulations and supervision. At least, it is supposed to do so. Jim also wondered about the flatness of the pyramid. A good point. The pyramid is bigger at the bottom for a reason. More IOUs issued at the bottom than at the top. We can think of that as a more sophisticated financial system. And generally, that is true. In developed economies, government IOUs, including cash, are a smaller portion of the whole. Since the US dollar is used all over the world to finance illegal activities, there are more of them sloshing about than you'd expect for a highly developed financial system. And now, after quantitative easing, we've got a lot more bank reserves at the top of the pyramid than usual. Question 2. What about settlement of euro dollars? Answer. Same story. Ultimate clearing is at the Fed since these leverage US dollars. Note, there are also private settlement services. I am simplifying. Banks with offsetting claims on one another can use a private settlement system. They only need to go to the central bank for net clearing, as only the central bank can create reserves. Question 3. The Fed mandates that primary dealers buy and sell treasuries. Answer. Yes. This is part of the operating procedures to ensure the Treasury can get deposits as needed and move them to the Fed to cut checks or credit accounts as needed. Question 4. Techie question about complications in Fed lender of last resort operations. Scott Fullweiler answered, and there is no way I can improve on Scott's paper since he is the numero uno expert. Those who are really wonky can go to his paper. It is far too complex for this primer. Question 5. Didn't Chairman Bernanke admit he bailed out the banks with keystrokes? Where does the Fed borrow from, and is there a limit? And wouldn't it be better to spend the money to bail out Main Street? Answer. Yep. Fed keystroked trillions of reserves into existence, buying treasuries and toxic waste mortgage-backed securities. Calling this borrowing is misleading, which is why I do not use that term. Yes, the Fed is indebted, dollar for dollar, for every one of those keystrokes. Reserves are Fed IOUs, so you could call that borrowing, and the banks with the reserves could be called lenders, since they are the creditors. But this is nothing like you or me borrowing to buy a car. We are truly limited in how much we can borrow. The Fed has no limit to keystrokes, unless Ron Paul finally gets Congress to put a limit on the Fed. In other words, self-imposed limits are always possible. The Fed and Treasury spent, lent, and guaranteed $29 trillion to rescue the banksters. Wouldn't it be better to spend a fraction of that to rescue Main Street and the unemployed? I think so. Probably 99% of Americans would agree. Unfortunately, we do not control the Fed and Treasury. Question 6. What is inside bank assets? Aren't there two kinds of money, government and bank? Answer. I think you mean what is on the asset side of a bank balance sheet. Reserves, electronic entries on the liability side of the central bank, treasuries, private bonds, and securities, loans, and a tiny bit of vault cash. Two kinds of money, yes. Two main categories. Inside money is the money-denominated IOUs of the non-government sector, what I called private money things. Outside money is the money-denominated IOUs of the government sector, cash plus reserves. We can also include treasuries since those are just reserves that pay higher interest. Note, it is outside money that is at the top of the pyramid. Thanks again. Sorry for being a bit late and a bit brief.